You don't need 10 indicators to become profitable. You just need a simple system you can stick to. Hi, I am Lucius, an intraday slash swing trader. I mainly trade J5 pairs like GJ, AJ, UJ, and EJ. My strategy isn't complicated, it's just based on structure, patience, and execution. I'm not trying to catch every move, just the clean ones. In this video, I'll briefly explain the core idea behind how I trade. Mainly, I focus on how price moves, key levels, and waiting for the right setup. 90% of the time, I'm just waiting, and that's where a lot of traders go wrong. They don't have the patience to wait. So right now, I'll hop on the charts to give a live example. Yo, yo, currently on the chart right now, I've deleted this video over, I think over 6 times right now. Keep making errors while making it. You understand? I'm kind of nervous, so I might not get this perfectly this time, but anyway, just you can just drop your comments and then I can improve. So don't don't slaughter me. So let me just go into the details on how this strategy work, like the brief details. You understand? So this strategy is called the pullback. Like I call it the 88 precision, but the idea is just pullback continuation. It basically works well when the market is trending. It doesn't work in the ranging market. And you know the market has three types of movement. Let me explain. That's the bullish market movement, which consists of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. You understand? This is the bullish market movement trend when the market is trending upward. There is called the bearish market movement. It consists of lower lows, lower highs, lower lows, lower highs, lower low, lower highs, lower low, lower highs, lower low. This is the bearish market movement. It's called the downtrend. So, like I said, the market this strategy only works or works best when the market is trending. Understand? So, I think the third market movement, how the market moves, like the third way the market moves, is the ranging market movement, which moves from support to resistance, support to resistance, support to resistance. You understand? Support, resistance, support, resistance. You understand? So when the market is ranging, it's not in a trend, it's just consolidating up, down, you understand? So that's the third way the market moves. So this strategy basically works when the market is trending. So the concept behind this strategy is whenever the market is in a trend, like let me say I'm trying to catch a bullish trend and the market is moving, actually, okay, let's say the market came to this point, retested this place as a resistance, came back to support, retested this place as a resistance, let me say, created a lower low, a lower high, I mean, then broke across this resistance and came back to retest it as support. So from here, I'll wait for price to react to this level, you understand, to see if this support level will hold. Then when I get multiple rejections, like multiple rejections, then I'll look for a continuation entry to the upside, targeting the next level. That's the next level, targeting the next level, probably like this, you understand? So that's the concept behind the strategy, pullback continuation. It basically works well when the market is trending. Same thing with the bullish market, with the bearish market. So this is for bullish, same thing for the bearish. That's just the concept behind this strategy, the pullback continuation. You understand? So let's get to the live chart, like live back testing. I mean, let me back test. Let me show how it works on the chart. So right now, I'll be giving you guys the. So right now, I'll be giving the example on the live chat, but it's just back testing. You understand? So let's get into the let's let's begin. So don't mind me. So first of all, I only use four time frames. I think I don't use this one. I only use four time frames, the 15 minutes and the 30 minutes for entry, the 1 hour and the H4 to mark out my levels. You understand? My key levels. So that's the four time frames I use. And I also use the 50 EMA. This EMA you see here, I say the 50 EMA. That's just what I use, you understand? So let's begin. So I mark out my levels. Here is a valid level because price retested this place multiple times. Here is also a valid level. Price rejected this level multiple times too. So let me step down to 1 hour. Let me match this level. Price rejected this level too. Think this level is also a valid level. Think that's all for now. So let's see. Let's see. In the 1 hour, the H for me. Okay. So let's replay. So replay. Hmm, let's see. So I'm waiting for price to probably go to this level. Let's see. Wait, hold on. Think. You say, okay, there's a level here. Price rejecting this level like multiple times, and price also retested this level multiple times. So I think this is a valid level also. Let me go to this one. Yes, it's a valid level because price also respected this level here. So I think it's a valid level. So let's wait, let price react. And the 50 EMA align there is also rejecting the 50 EMA to show that this level is actually strong. So, but I don't just hop because of it's a valid level. I wait for confirmation before I enter into the trade. So let's see. I don't take trades outside Asian and London session. So that's the two sessions like I execute my trade. So currently we are not in Asian session, so I can't execute the trade. See, so so people who sold, who took the sell position from here because price closed across this 50 EM because how I get my entry, I wait for price to close across the 50 EM on both 15 minutes and the 30-minute time frame. Like I wait for price to close across the 50 EM on both the 15 minutes and the 30-minute time frame. Then I take my position, like I enter, I execute. So but as of this place, price closed across, but it wasn't my timing where I enter when the hours I usually execute my trade, so it's invalidated. You understand? So wait, let's see if price will actually go across or come back down. We mark out this trend. So I'm basically waiting for price to break it. So if price crosses 50 EMA, so price has crossed 50 EMA. So let's check if the 30-minute EMA. So if price has closed up and crossed across the 30-minute EMA, so the 30-minute EMA price hasn't closed across it, so I can't take the trade. So I have to wait. Let's see. Okay, it has closed across this 50 EMA, so it's a valid. It's it's a valid go ahead for me to execute this trade. So after price respected this place, so I'll use my Fibonacci extension to check if it's a valid Fibonacci, a pullback continuation. So price came back to this level. We tested it, rejected it multiple times, and it's got to the 50 Fibonacci pullback level. It's at 8.20. Like these levels are valid pullback levels for execution. It's like a golden zone. So I'll execute. And my next target, I can target this minus 61.80, but I have to like target the levels where prices has been expecting so that I can just take my profits and just understand. So that's how it works, even in the real chart. So my stop loss will be behind structure, like behind the recent low or the recent high, I mean. So this point, my stop loss will be behind it. Then my take profit to this level here. So let's see. Okay, let's move in. All right. You know, so that's all. That's just the concept of this trade, this setup. I mean, is pullback continuation. Like I explained in the example, I wait for price to to come back to a level, retest it, give me a sign that a continuation sign before I execute. So price rejected this level multiple times. At this point, rejected this level here, here. Although it's wicked out people who took the sales early and before it came back down, you understand? So that's just the concept behind the strategy, pullback continuation. I don't know if I explained it very well, but I just hope I pass this message properly. Like I'm trying to get better at this. So this is just the concept behind the strategy, the pullback continuation. So that's all for the chat work. So that's just the basic concept behind the strategy. Although there's a lot of mechanism behind it, but I just dumb it down. But in the future, I'll be explaining more and more, you understand, on how this strategy works perfectly, like how you can execute it perfectly. But having an edge on the chart is just one thing. Without risk management is very important. Without risk management, your chart work is useless. You might be in a winning streak like one, two, three, like on your 10th trade you might be winning, but on your 11th trade, if you have a bad risk, it will just mess up your whole work, your weeks of discipline, your months of discipline. It will just go down on one trade. So risk management is very important. You understand? I even call it the real edge because there's a time you might be in a losing streak, and if your risk management is bad, you'll be out of the market. And the goal is not to like try to win big. The goal is to stay in the market long enough for you to be able to make more profit. Winning big is one thing, but trying to do that at the expense of your entire account. Well, I just say is it like casino. Because if you treat the market like a casino, it will treat you like a gambler. So don't come with that gambling mentality to this market. Although sometimes you might just feel that adrenaline to just do that, but if you want this to be a career, a long-term path for you, you have to apply risk management. It's very, very important. Having a strategy is one thing, but having the ability to follow through and execute it mechanically is another thing. So every strategy you see out there actually works. It's just your ability to follow through and execute it. That's where most people get it wrong. You understand? So seeing this strategy or the way I execute mine, it might look easy, but on the live chart it's like a different game because emotions play in your your different habits come on. Like you see yourself like just I don't know how to explain it, like but people who trade actually know how this thing works, you understand? Backtesting is different from the live chat. Backtesting is just for you to understand or grasp the concept behind the strategy, but on the live chat, it's a different thing because patience has to play in, timing, you being able to hold the trade long without being emotionally affected when you see price or you see candle reversing or going against you, something like that. A lot of things plays out, you understand? So having a strategy is not enough, but the ability to follow through and execute, that's just the main thing. I'll be breaking down my trades on this channel so you can see how I apply it in real time. So with all that being said, if this video have helped you in any way, like, comment, subscribe. And I also have a trades only channel, link in the description, where I only post charts before and after execution, like just only charts, my charts, live chat and the rest. So I think that was all for this video, and peace out.